Robert Kiyosaki, the mind behind the Rich Dad series, is known for his bold financial insights. In 2024, he's warning investors to brace themselves for a turbulent year in the economy and financial markets. It's crucial to remember that Kiyosaki often goes against the grain with his advice, which can be a hit or miss. He's dishing out tips for safeguarding and growing your money this year, but it's wise to approach them with a bit of caution. As Kiyosaki's strategies differ from mainstream advice, it's important to weigh his suggestions carefully and consider other expert opinions. Ultimately, personal research is key before making any significant investment decisions based on his forecasts. In the ever-fluctuating world of finance, Robert Kiyosaki's latest forecast has sent ripples through the markets. Known for his straight talk and unconventional wisdom, Kiyosaki, in a December 10th post, warns of what he believes could be the most significant market crash in history by 2024. His advice? Brace yourself and rethink traditional investment strategies. Kiyosaki's bearish outlook isn't new. He's long viewed the U.S. financial system and the dollar with skepticism, predicting their eventual downfall. He argues that sticking to the old-school investment mix of 60% stocks and 40% bonds, a strategy once considered balanced, might be a recipe for disaster in the turbulent times ahead. So, what's his game plan? Kiyosaki advises a bold pivot to assets like gold, Bitcoin, real estate, and oil. He sees these as havens in the face of a crumbling stock market and a shaky U.S. financial system. Why gold and Bitcoin? Gold has been a trusted asset for centuries, often thriving when traditional markets falter. Kiyosaki refers to it as God's money, implying its enduring value. Bitcoin, often dubbed the people's money, is a newer player but has rapidly gained traction as a digital alternative to traditional currency. In Kiyosaki's view, these assets could shield investors from the volatility and decline of the stock market and the dollar. A new stance on real estate and oil stocks. Kiyosaki isn't new to real estate, it's been a cornerstone of his investment philosophy for years. He sees properties and oil stocks as providing steady income and stability, especially in uncertain economic times. While the real estate market has its ups and downs, rental income and the tangible value of property can offer a safety net. Bitcoin, a major bet. Kiyosaki's stance on Bitcoin might raise eyebrows. Suggesting a 25% portfolio allocation to Bitcoin is a departure from the usual conservative advice of capping crypto investments at 5%. His prediction hinges on Bitcoin not just surviving a financial meltdown but thriving, potentially reaching unprecedented values. The core of Kiyosaki's investment philosophy. Kiyosaki's distrust in government institutions and traditional financial systems isn't just a passing comment, it's central to his investment approach. He believes that wealth isn't built through a high income alone but through smart, leveraged investments. While real estate used to be his primary focus, he now includes tangible assets like gold and disruptive technologies like Bitcoin in his strategy. Risks and realities. It's crucial to remember that Kiyosaki's views are not universally accepted. His bold predictions and investment suggestions come with risks, especially for those not accustomed to market volatility. The dramatic shift from traditional stocks and bonds to assets like Bitcoin and gold isn't a one-size-fits-all solution. As we navigate these unpredictable financial waters, Kiyosaki's advice serves as a reminder to think critically about our investment strategies. While his predictions are stark, they underscore the importance of being adaptable and considering a variety of assets to safeguard our financial future. Whether you fully embrace his strategies or take a more cautious approach, staying informed and flexible in your investment decisions is key in today's dynamic economic landscape. Things to consider. In the world of finance and investment, Robert Kiyosaki, a well-known figure, often makes headlines with his predictions about market crashes. Since around 2010, he's been warning of impending financial doom almost continuously. For instance, he tweeted on October 28, 2020, about an upcoming everything crash, suggesting that the entire financial system was on the brink of collapse. However, it's important to look at these predictions with a bit of perspective. While it's true that markets do experience downturns, sometimes even severe ones, staying invested over the long term has historically paid off. Let's take the S&P 500 as an example. When Kiyosaki made his 2020 prediction, this key stock market index was around 3,360 points. Fast forward to mid-December 2023, and it's sitting at about 4,700, that's a 40% increase. Go back even further to 1987, and you'd see an astounding 3,600% gain. In simpler terms, if someone had invested $10,000 in 1987, they'd potentially have around $360,000 today. This brings us to a crucial point about market timing. Predicting exactly when to buy or sell stocks is extremely challenging, even for professionals. Many who try to time the market often miss out on significant periods of growth. While Kiyosaki offers valuable financial advice, his specific market predictions haven't always been accurate. So, if you're following his or any expert's predictions, it's wise to do so with caution. Remember, investing is a long game, and while expert insights are valuable, they are not always foolproof. Keep a balanced view, and don't put all your eggs in one basket based on predictions alone.